In today's video, I'm going to be breaking down some of my favorite dividend growth ETFs that are in the United States. Of course, as Canadians, we can still invest in these ETFs, so they're definitely something to look at. Let's get down and let's check them out. So the first one that I really like is CSB, Victory Shares US Small Cap High Dividend Volatility. This is a very good ETF. I really like it. So the yield is 3.45%, which is pretty good. And then what we also have is an MER that is 0.35%. So essentially for every $100 that we put into this, it's going to cost us about 35 cents a year. And we're hoping that this stock goes up by more than that amount every single year, which it has historically done so. Of course, the volume is quite low considering the other ETFs that I'm going to be talking about today. However, at 30,000 shares traded per day, it's still pretty good as long as you're not going to be buying thousands of these shares. Its 52-week high it has pulled back from. It was $66, now it's $61. So still not too bad of an ETF to invest in. And this is the chart. This is a very good chart in my own opinion. We can see that, of course, there is some growth that happens with this ETF, which is pretty good. We can see that it was about $35 about 5 years ago, and now we're sitting at 61 with a 66 high. So almost double in 5 years, plus you're looking at a pretty substantial dividend. This is a very good ETF. We can also see that there is some dividend growth. So if we go from June to June of last year, there was a little bit of a decrease. However, if we look at the fact that it does pay a monthly dividend, that really does make your life a lot easier in understanding how much you're able to spend every month if you're using this as your monthly or yearly income. These are its top holdings. Some of these you may or may not have heard of, but some of the really important ones that I've heard of is the American States Water Co. as well as the York Water Co. These are companies that I've heard of. They're not massive companies. These are all very small companies, but they are still pretty solid. Next is an even better ETF. This one is SCHD. It's the Schwab US Dividend Equity ETF. And this one has a dividend of 2.72%. Now, in my opinion, this is a more solid ETF versus the last one. However, it does have a heck of a lot less of an MER of 0.06, so it's a lot cheaper of an ETF. It's a little bit less actively managed, but this one does trade at 1.9 million shares every single day, which is huge. And it's pulled back from its high. It was $78, now it's $75, so it's a good solid $3 drop. And as we can see, there has been some pretty consistent growth up until the, of course, pandemic. And then since then, it's had just an absolute tear. This seems to be a very solid chart, in my opinion, as well. Now, this is pulled back just a bit. So I would assume that the stock market's going to be traveling sideways for probably a little while, and getting a dividend during that time is going to be very beneficial to us. Unlike the last ETF, we actually have an increase year over year on our dividend. Now this pays quarterly, and that's still pretty good. We can see an increase from year over year twice. We can even go back a little bit farther and see an even bigger increase. This is stuff that you really want to see, and this will allow you to benefit from the dividends over time. Now, the top companies here are some of my own top companies that I like to talk about on this channel. Home Depot is extremely solid. Texas Instruments, as well as BlackRock, which is a company that I currently own a few shares in. And then a couple of companies that I do technically own through ETFs as well, like Pfizer, Cisco, Home Depot, and just overall very solid companies. Next is the iShares Core Dividend Growth ETF. It's D as in dog, GRO, G-R-O. So DGRO is the ticker. And from there, we see that the expense is a little bit higher than the last, which is 0.08. So not a huge difference. Average share volume traded every single day is 1.8 million shares. And this has also had a slight pullback, but nothing really to bang the table on. It's only about $1.40. And then the chart looks even better than the last. Even more growth than what we've seen from the last ETF. A little bit less of a dividend, but more growth. That at this point, it really just comes down to what you prefer. Would you rather prefer stock growth or dividend growth? And we can still see that this dividend or this ETF also does increase their dividends, which is something that we really want to see. Now, this doesn't always happen. We can see that it decreased year over year on September, but for December, it increased. And then we can see also for March that it increased as well. And for June, it increased too. So this is a very solid ETF. Some hiccups year over year in September, but that's nothing to really be too scared of. They're still raising the dividend year over year. So still a very solid ETF, especially with that stock growth. Another solid list of companies, Microsoft, Pfizer, Johnson & Johnson, JP Morgan, all huge growth companies, I think, into the future, same as Apple. The only one I would be really worried about is the Procter & Gamble. However, I still think that they're going to have some huge growth into the future anyways. Next is the Vanguard Dividend Appreciation Index Fund ETF, VIG, on the stock market. This one has a little bit smaller of a yield as well, and it's got a smaller MER of 0.06, so very similar to that second ETF I was mentioning. However, this one has a lot less dividend yield by about a half. It's also had a little bit of a pullback too of about $4 from its all-time high, or not all-time, or recent high, but it's also an all-time high as well. It trades at about 1.2 million shares per day, and it seems pretty solid. Its inception date is 2006, which is nice because now you can see well over 10 years of history on this ETF to see if it suits your needs, but I really only look at 5 years. In 5 years, you've gone from just under $90 all the way up to $130 before the pullback, which everything had, and then up to $154 as of right now. So in 5 years, you have a 50%, almost a 50%, just over, more like a 60-70% increase over 5 years. That is a pretty substantial increase to your capital. And the nice thing with these dividend growth funds is the fact that the stocks are meant to grow but also give you a dividend, and that's kind of the nice little take from these types of ETFs. The actual underlying value will grow, and you also have a dividend that also grows. So very, very nice to have. If we look at September over September, we can see that there was a small increase. And if we look June over June, which is something that I really like to do, we can see a more substantial increase. So to me, if it's increasing its dividend, if it's increasing by 50% over 5 years or more, this is definitely something that is a great ETF to invest your money into. And the holding companies are huge. JP Morgan, I'm really, really high on that stock right now. Johnson & Johnson, very smart or strong company. Their vaccine isn't exactly the greatest in terms of what the US is saying. However, still a solid company to invest in because of what they've been doing. Home Depot is another solid one. Visa is the future of transactions, in my opinion. And Coca-Cola, I'm not too sure how well of a company that's going to be in the future, but if they start getting more and more healthier stuff, I think that they could make a massive run. And the last ETF I'm going to talk about is the Vanguard High Dividend Yield Index Fund ETF, VYM. This one's yield is a lot higher at 2.8%, and it's got a low MER of 0.06 and trades at 1.6 million shares, so it's very liquid to be able to get in and out of. This one's also had about a $3 pullback, so from the all-time high, that seems to be a pretty good deal. It really does depend on what's going to happen, of course, with the stock market. As this is an index fund, it's going to be covering pretty much the most of the stock market in the United States. It's had a good bit of a run, a little bit of a pullback, another run since. It looks like it's had a double top, which which the stock market across a few different indexes have seen a double top, so there may be some downside pressure. I'm not too sure how far down it's going to go. I doubt it'll go down to 95, probably about 101 or so probably getting close to the bottom. But how I like to mention when to buy ETFs and buy stocks is to buy a little bit at a time. Don't just go out and say here's $5,000 or $10,000. Say, well, here's half, here's 2,500, and then I can then say, well, if it goes down, I'll average lower at another 2,500, and then we'll be all set. Now, did the dividends grow? That is the big question that everyone always asks. And here, let's see, we go from 83 cents down to 75. Not that great, is it? However, we can see that March did grow, so this ETF is still growing its dividend. Of course, there's always going to be, if you're not getting a set price every month like you do with some BMO index funds, then of course you're going to be still fine as long as they continue to up their dividend at least a couple of times per year, or year over year, that is. And again, pretty much the same set of companies as the last: JP Morgan, Johnson & Johnson, Home Depot, Bank of America is new on the list, and Exxon. So still, I think that Exxon could actually make a big run this year, especially with gas prices going up. So something to look at. I hope that this list of ETFs gives you something to think about, gives you a new ETF to even look into. Remember, don't trust everyone on the internet. Do your own research. I hope that this video has helped you. If it has, hit that like button, subscribe. I'll see you guys again next time.